What's up? All right, so a little bit of housekeeping first, right? Just kind of get everybody up to speed on what I've been doing. This will work better for day traders and also for swing traders. So, one thing that I've been doing is I've been keeping track of this dashboard. This is my general watch list. It might change a little bit here and there, but I get this list every day. And I like how it tells me, if we're at resistance or not, or what the ratings are on this. But I get a 7-day expected move, which is nice when doing, short-term options trades, and whether we're exceeding that move or not. But I get the list, and it's these stocks right here, basically. It's my go-to list. So every day I come in and I run an update, which changes all these numbers, and then I get the gamma levels for both of these, for Thinkorswim and for TradingView, and I share that into the community. So every morning I get the list, I post it into the chat before I start my live stream. So if you want to find it every day, just scroll up in the chat. I think I'm going to start pinning it to make it easier to find, and that way every day we just put a new pin in there and we delete the old pin, and Bob's your uncle, right? Maybe at some point I will convince Lucian to provide a swing channel again where we can keep all this stuff posted. And that way, if we can get it all into one channel, it'd be a lot easier, right? The pins would stay put and all this stuff would just be easier to find. But this list is, for the most part, what I trade. I mean, there's some buy and hold stuff, certainly trend trades that are duration stuff or in there long term. But these tend to get in and out, and or I watch them, like these XLs, XLIs, XLKs. Keep an eye on those for like sector rotation and things like that. So the updated list gets published every day. And once you have those indicators downloaded, you're able to just go from chart to chart, and you don't have to sit there and keep updating everything as the day goes by. So Netflix, for an example, if we get my drawing out of the way, these are the levels on Netflix. And earlier today, I mean, look where it stopped, just perfectly right at that GEX 2 level. And on the fade down this morning, it landed on that GEX level too before it started to rally. So we just have those in there, right? Which is awesome. We just go from chart to chart through the watch list, and they're all there, updated every day with the document. I don't know if I'm going to do a combination of that document every day. I think maybe just once a week where it says buy or hold or anything like that. Give me a moment. I got to read something from a question somebody posted. While I'm reading, just got a NVIDIA highly unusual sweep on the call side. 377 contracts using the 770 call strike for the February 23rd expiration. I know if you're like me, getting it read to you doesn't help. So let me just post it. You can see it. It's in the chat. It'd be easier to answer these kind of questions if people were in the stream. I'm almost done. All right, sorry about that. Whew, had a lot of typing for someone with 7 fingers. Anyways, so the watch list is mostly the Mag 7, the XLs, the indexes. But I noticed like this morning I didn't see necessarily the indexes, so I might have to adjust the list a little bit, but I don't want to keep adjusting this list. So once I get it set, I really just want it to, be left alone. Well, I got 2 of those open. Who cares, right? Let's just shut one down. So the list, I can publish it, which is basically turning it into a PDF document that you can download. Because when I try posting pictures of this, it's really hard to see the pictures. There's just so much information on here. But this list, it comes with the expected move, the flip point, it comes with the call resistance or put support, it has the GEX expiration levels, everything that you need. And every day I post the gamma levels, whether you're using Thinkorswim or you're using TradingView. So I want to share this page, which I will print and share at least once a week, maybe more than that if people are asking for it. And then daily I share these levels. So in the chat, let's scroll up and I'll show you where it was in the chat. Like today. Today I tried something different. Instead of posting the document, I posted these Google links, which is kind of cool. I published them into Google to where you guys can just go and get them off of Google. I thought it was a much cleaner sheet, and I don't know, I just really liked it. So it's these right here. While I'm here, I'm going to go ahead and pin those, and what we'll do is we'll just I'll pin them every day, and probably every second day I will delete the third pin, right? Does that make sense? That way we can see yesterday's if we want it. We can see today's, but we don't want, like pin after pin after pin. And once these are published, you can just keep scrolling back in the chat to find them. It's not like we're going to delete the post, we're just going to delete the pin. So we'll have a track record. When I used to stream every day or all the time, I always use a real broker. I don't use, the whole paper trade stuff. And if I am on paper, I always tell you guys, look, this is paper, don't follow me. Because if I'm going to do a call out, I'm going to put money on the line, right? I'm not going to throw a trade out to you guys that I'm not actually risking with you, because I wouldn't want someone to give me a bunch of trade ideas if they're not also trading it with me. If it's good enough to trade, why not, right? I don't like those places out there that do trade callouts and they want to charge you a fortune for it, and then they don't trade it. Oh, they have some paper hypothetical account like, oh, look what you would have made. Yeah, whatever. Those places are frustrating, right? So we want accountability, we want a track record, and we want to know that these levels are even valuable or useful. So these are where the levels were posted today. I'm going to walk through the steps on how to get the watch list, and then how to install these levels into your trading platform, whether you're using Thinkorswim or TradingView. So first, we need the watch list, and like I said, I might have to adjust this a little bit, but I don't want to keep changing a lot of names on this list. We want the names to stay and to just have the same names every day. So I notice I've got the SPX, but I do not have the SPY. So I'm going to add that, because that's a huge oversight. What was I thinking? And I have the NDX, but I don't have the Qs. So we're going to at least add SPY and the Qs to this list. Otherwise, we can just copy all the names on the list, and we can go to Thinkorswim and install those just right there from the clipboard. And then also with this list, you can download it, and or you can turn it into a text document and you can upload it into your TradingView. I have Thinkorswim running on my other machine, but you won't be able to see that, so I gotta start Thinkorswim. I am gonna log into paper though, because if I remember right, we opened a trade in paper last week, and as I usually do with paper, I forgot all about it. It's one of the reasons that I never really did good at trying to paper trade swings, especially in options, because, well, I mean, like, what's the point? It's so frustrating to even try to remember a paper trade. I never go to my paper account, and so I forget that it's there. It's just horrible, right? It's just horrible. I hate paper trading. Now, don't get me wrong. When it comes to like paper trading, day trades, so where you can literally see what you're working on, paper drills, paper trades for strategies, things like that, you got something to work with. But swing trades on paper, that's like third dimension torture. So let's see what trades we have on here, if I don't break this thing. Wow, maybe I don't have anything. I could have swore we put some paper trades on. Maybe they expired. I don't know. Oh well, at least I didn't forget anything if there's nothing there. So what we would do is we would copy those names, come over to Thinkorswim, open up the sidebar, start a new watch list. Wait, this isn't paper. Well, that would be why. I didn't log into paper. Start a new watch list. Once you've got a new one, you want to go down to Edit, Create Watch List. So create new watch list, import. We want to paste the symbols from the clipboard, and I copied those out of that document. Hit OK. It populates. Now we've got the list. And like I said, this list might rotate a little bit, but for the most part, it's not going to. There's a method to my madness. All these XLs are the 9 sectors that we watch, plus a little extra. I added communications and metals and mining. So basically 11 instead of 9, but it's the 9 that we watch. And then I've got the China ADRs that I like. It has Monsters of Tech and a couple of financial names in there, and then the indexes. I was limited. When we go back, I'll show you what I mean by limited. I couldn't just load the boat with whatever I wanted. No, that's a good question. I don't know how many people would actually show up. I think I tried that before, and no, like nobody comes and shows up. The question was having classes on how to think or swim. I mean, really, I would love to do it. I like teaching people how to use think or swim, but I don't like giving up, a day or part of my time and then nobody shows up, because that sucks. It is really boring talking to myself. Thinkorswim has a bunch of people that show how to do that, by the way. If you go to Thinkorswim on YouTube, they've got Ed and Connie, and these are really smart people, CMT certified. They work at TD Ameritrade, and they've got all these videos on how to think or swim. They're great videos. And they've got replays. You can go back and, you can just search for what you're looking for and watch a video on how to do it. And I have done some how to think or swim videos. I've got like a series of 10 or 11 videos to show you how to set yours up how mine looks, which I know is not the same thing as how to use the full, think or swim, but at least get you to where you've got your grids and these charts across the top, and being able to use these 4 additional charts so that you don't have to keep changing your main chart all the time. So this is my list. Let's go make that adjustment, adding SPY. This is only these boxes is what I get, right? So I had to kind of keep it limited, but we do need SPY and we do need the Qs. There's just no way around that. At some point, I know we're going to have to rotate something. XLC is not heavily traded in the options world, so getting options levels for XLC doesn't really hold a lot of weight, right? So I might end up knocking that one off. Same thing with the Dow and IWM. Their options are just not that good, and we're using options data. If the data is not good or there's not a lot of it, it won't be very accurate. NDX is the same thing, not a lot of optionality there. The reason I added those, however, is because of the upper page. In the upper part of this page, it has all of this information up here. So even though the Think or Swim chart may not be so good, with like the daily gex levels and things like that. Um, Whether or not it has a rating, buy, hold, bullish, bearish, the distance to its flip target, and its weekly expected move. Those are things that I'm still interested in on communications and the NDX and things like that. So even though its options might not be that great, and I try to keep a pretty diverse watch list. It's hard not to just stay in tech, right? Because tech's got all the options liquidity. But we need commodities. So I've got silver and gold in there. We need some diversification, like I've got some China ADRs, some financials. If you look around at the market at what's moving right now, utilities and I mean, shoot, everything today is moving. But I mean, in the bigger picture, utilities have been doing really good. Not utilities, uranium. I stuck on U. Uranium's been doing good. Um, if this China ADR expands, we're going to see more solar. We're likely going to see more of the EV market kind of expand. We're still looking at pot stocks to expand. So there's a lot of areas that we could look. But this list, as I demonstrated down here, I don't have a lot of room. I do have another source to get those kind of options figures, but this is something that is just put together that I can give you guys every day that is static. I don't want a lot of changes here, a lot of rotation. Consistency is key to profitability. I don't know if you guys have heard that before, but it really is. If you can stay consistent, you will begin to dominate. It's the transitioning from different all the time that keeps you fluctuating and never quite growing in like a master skill level, right? If you're kind of good at everything, then you just suck at everything. You need to be really, really, really good at something and then get really, really good at something else, right? One thing at a time. So what do you guys think? Is there anything that I can change on this list that you think would make it a little better for you? Every day, we're going to publish the levels so that you could put them into your Thinkorswim or your TradingView. At least once a week, I'm going to publish this entire page so that you have access to it. If you want it more than that, just let me know. I'm willing to do it daily. It's not really that big of a deal. I just don't want to flood you guys with so much material that you just feel like you're drowning in it, because that's not going to help anybody, right? It doesn't do you any good. None of this is a trade, right? This is just our watch list. Whether or not they're tradable and how we might trade them would be on us on a day-to-day basis. One thing that I used to do that I grew into this is what I still do now. When I had a day job in the afternoons, I would have my last afternoon break at around 3 o'clock. Well, that was perfect because that was 2 o'clock. It was 3 o'clock market time, 2 o'clock my time. And I would use that time of the day to look for new trade ideas. I know everybody likes the morning session, the run, and all of that, but we move a lot in the overnight hours, especially some of these names that are China ADRs. You can't wait until pre-market tomorrow trying to find a trade, because you guys know how it is. By the time you get up in the morning, they've already gapped up, they've made a big move. We get into the open, they might run a little bit more, and that's about it. And then what? Well, then you're trying to fight the top and a range. NVIDIA today is a perfect example. Now, NVIDIA actually ran today, which is great, but take Amazon. Big gap up. We got into the open. We've done nothing for the rest of the day. We topped out at 9:30 this morning, and that's still the top now. So if you had got into it yesterday afternoon, you'd be sitting pretty in Amazon today. If you tried to get in it today, you're losing today, unless you got in on these lows. We all think every day is going to be another NVIDIA kind of market. And even this, I mean, it was looking good. Now it's starting to dump. They didn't like that econ at 1 o'clock. This is what we're all trying to find as a day trade. Markets that have run up or that are ready to run up. We get into them in the morning and they make a good move on the day. NVIDIA ran $30 after it opened. from 600 to 630. That's fantastic. But we're not going to find NVIDIA kind of trades every day from the open. But you get a lot more success getting into things in the later part of the day for tomorrow. Right? That's the kind of stuff that I like. And with options, you can really reduce your risk considerably. I'm not saying that you won't lose trades, right? Because that's really unrealistic to believe that we're not going to get losing trades. But keeping the losses small and getting good wins, that's not an unrealistic expectation. So if we use options the right way, and or if we use, just straight up using shares or even a combination of those, then we can find opportunities in the later part of the day for a short-term trade, or even, as a separate discussion, as a longer-term buy and hold kind of trade. This is the watch list. I was reading through their documents on that page, by the way. This is a company called Trading Volatility. I don't remember exactly, what this costs because I didn't have to pay for it. I'm not recommending that anybody goes out and buys it. They are directly related to Tradier, and Tradier is an account that I have because of because of StockCharts.com. It is the broker that's integrated with them. So I have a Tradier account which connects with this. Tradier is going to be coming in to do a webinar with us soon, which is really cool. But Tradier's just a broker, right? And I mean, it's a stripped down broker. I'm not going to say it's as stripped as Robinhood or Webull, but it's pretty stripped down. It's very fast. It's web based, but Trading Volatility, this website, is got some really great material in it, and it can do more than what I'm showing you guys here with this dashboard. But I want to present this dashboard to you every day and those options levels so that you can go in and have them for yourself to make trade decisions, either day trading or swing trading or whatever. As you can see, they have some pretty complex things, right? I mean, it's a robust place. On these options stats and these GEX levels and everything, they are not just end of day like I thought they were. They're intraday. They're changing. So if I was to update the scan, these levels should or would update, which is cool. Right? I thought they were more of like Mentor Q, and with Mentor Q, they use end of day data. So that's what I thought we had here, but no, it's actually more robust than that. And I can set alerts and do all that kind of stuff too. And for anybody who does API, who understands that, they have it. So I'm going to provide that page every day, kind of give it to you guys. You have the watch list. It won't change very much. Another thing that I want to get into the habit of providing more often, and I've done it for the last 2 days, and I'm going to continue to do it, is this founder's note. Now this comes from Spot Gamma. You have to have an account here to get access to this page, but they give us a chance to download it. So, I mean, they're like encouraging me to share it, and I'm going to share it. I've been sharing it for the last 2 days. So every morning, I'm going to post the updated watch list levels, and then I'm going to post this print off, no matter, how much there is of it to print. Yesterday's was very short. There wasn't much to it. It normally has these levels here, and some of them are very important. Whether we're in positive or negative gamma is a really big deal for the S&P, because when you get to support and resistance, if you're in a positive or negative gamma, you're supposed to buy into weakness or sell into strength, or vice versa. So it depends on, where we at with our gamma levels. When we get to resistance, should I be trying to buy the breakout or should I be selling into that strength as we're running up into it? I mean, if I know the GEX levels, I've got a better understanding of what I'm supposed to do there, right? And if you have this, then you have a better idea of what you're supposed to do there. A lot of these things, spot gamma, trady ticks, they have videos on YouTube. So even though you don't have an account here, and I'm not recommending that you go out and spend a bunch of money to get an account, you can understand this material by going to YouTube and watching those videos. In my 2 hours in streaming in the afternoons, it's not like I really have the time to flesh out these different tools, which I would do if you had the tools too. But if you don't have the tools, why do we want to spend hours going through what this material is or what these tools can do if you're not even using them? I can just post the material and you can check out a YouTube video on some particular piece of that material that you might not understand. These write-ups are really good and they'll give you insight into the current market conditions. So it's not some vague, big picture idea, that you would get on MSNBC or something like that. These are nuanced, dialed in pieces of information that specifically focuses on your trading day today and how it might affect you for the end of the week, the end of the month, which ties right into our swing trades, right? So you'll find those every morning at the same spot where I post my morning briefing link. And that way you have it all together in one spot. And like I said, I'm hoping soon that I can get Lucian to give me a Discord channel. But he's kind of got his hands tied because if he gives me a channel, he's going to have to give all the other moderators a channel, and then we're going to have a big Discord again, and then somebody's going to cry that the Discord's too big and we'll have to downsize. And I don't know about you guys, but it gets tiring, right? Swapping around all the channels, and I just, don't want to go through all that work for nothing. So, finding opportunity. I had mentioned we were going to talk about this today. What we just covered is the last piece that I had mentioned, the new coaching watch list with the options levels posted daily. Now, I have access to so many tools. When I want to do a deep dive, I can check a lot of places that has paid information. And I mean, I can really dial things in. What I want to show you guys is that even if you don't have accounts at all those places, you can still get some really detailed, dialed in information that can help you make a more informed decision. What you really want to do is first start with your own watch list. Now, there's two minds to this. There's the trader that says, I'm just going to look at whatever's moving, and they don't keep a set watch list. They run a scan, and as long as their criteria is met, a name will pop up on their scan. I'm not necessarily against that kind of approach, honestly. The problem with that, though, and let's just bring up Thinkorswim for this, we can go to the scanner and we can dial this thing in to do anything we want. Anything that you would ever look at a stock chart to see, we can make this scan for it. Breakouts, breakdowns, indicator, crossovers, alerts, anything like that that you would want to do, this can do it. If it's on a stock chart, this can find it. So that's one approach. Then we can narrow things down by what industry they're in, what index they're in, if they're at their highs or at their lows, what kind of volume they have. We can even just look at anything that has weekly options, which is my most generic watch list. Just that right there. What has weekly options? And when we run that kind of scan, we get 608 names that have weekly options. If you're an options trader, it's got to have weeklies, right? I mean, that's kind of a bare minimum. It's got to have weeklies. Otherwise, we can't even swing trade it. We can do buy and hold stuff, certainly, but I would never try to swing trade an options trade if it doesn't have weeklies. It'll just be too much slippage, too much risk. It's not worth it, right? And just because it has weeklies doesn't mean it's going to have good options, but it will at least get us pointed in the right direction. So, two minds. One trader will say, I'm just going to put together exactly what I'm looking for, tell the market to scan that, and when that shows up, I've got it. Okay, I don't disagree with that, but one, the thing that you need is already happening, or it wouldn't have been found in the scan. So, say breakout trades. You can't find something that's about to break out, but you can find things that have broke out. Wouldn't you rather find it before it broke out? I would. I'd rather see it before the breakout and then make a consideration about how I want to trade it rather than having it already break out and then trying to figure out what I'm going to do with it. Same thing with, like moving average crossovers or MACDs or anything that you want to use. The event has already happened. So I don't like that approach. Plus, the names are constantly changing, and you might not know every name that pops up. What's their widget? Who's their CEO? What do they do? Who's their competition? What was their last earnings like? When's their next earnings? Do they have dividends? Have they cut their dividends recently? What country are they in? What index do they reside in? What's their sector? Those are the kind of questions that I want answers to if I'm going to take a swing trade and I want to know what I'm trading. So when I use a fixed list, I can slowly learn every name on that list. It's not like I gotta, stay up late at night tonight trying to figure it all out. But if my list is the same list every day, I can slowly develop a stronger understanding of every name on the list. Then we can start to carry the narrative. This is a phrase, if you haven't heard it yet, I hope you really start to grow into it. Carry the narrative is where you lay out or you annotate your charts. And as time goes by, the charts just continue to get new data and new information added to it, and you really just don't go back and delete the old stuff. You might set it on a different layer or shade it to where it barely shows up, but you keep that data around. I really carry the narrative on one market, and that's like the ES. And I'll show you one. I've got it saved to where I don't screw it up. So this is a different history, but it's close. It'll work. You see it every day when I'm doing the morning briefing, whether you really notice it or not. It's with these VPOC levels. And we're kind of above a lot of this, but it's really light, shaded back there. The PPI price at the close of that day or CPI at the close of that day, when FOMC was, whether it was, an increase, a cut, no change, what Powell had to say, those kind of notes get added into this, and it's just carrying the narrative. Even if you wasn't to go in and lay out that narrative on your chart itself, knowing these key levels is still going to help you, even if it's not written down. Right? Like when I look at this chart, I'm sure you're going to recognize a couple of these. There was COVID, right? Oh, thanks, Captain Obvious. There's the bear market pullback. This is the Bank of Japan interference. Then there was last year when they did the bank bailout, right there, or the AI explosion, right there. Every piece of this chart has a narrative that goes with it. Beyond just, well, there was a wedge and we broke out and there's a double bottom and triple tops, and it's where did they do a rate cut? Where was Jackson Hole? Each piece has a part of that narrative so that there's a better understanding of the price action that we're seeing. And when we put it on a daily, that narrative really can be carried forward. Like, we start getting into the Jackson Hole mic drop moment, right? And when Powell told the market to suck it up and take it, the 200 moving average rejection from back in August, when literally the whole world was watching us run into that 200 and everybody was talking about it. And there's so many pieces on here. Carry the narrative. So I don't like to rotate out of my base list of stocks. I'll look at other things and certainly I'll find a trade now and then, but you want to make a decision about which one of these two groups that you want to be in. And it's not right or wrong. You can be in both groups if you want to, if you got that much time on your hands. But I'm more of a person who likes my fixed list. I don't really want to change it that much, and that's my go-to. If you're wanting a fixed list, but maybe you don't want mine, try to fix your list into a particular group or category. Say, the top 20 names in the NASDAQ 100, for an example, or the top 10 names in the S&P and the top 10 names in the NASDAQ that doesn't overlap. You could do it that way. Or you can pick your groups, say the Mag 7, the China ADRs, whatever, right? There's no wrong approach to this. Once you've got your list, you want to start trying to narrow down what kind of trades do you want to do. Are you really focused on buy and hold stuff, or are you trying to do more short-term stuff, momentum and trend sort of thing? For momentum, that one's kind of hard because a lot of times momentum just hits, and usually from a bad spot on the chart that nobody would feel good trying to buy from. All-time highs where every day we just ripping higher and higher and higher and higher, say like Nvidia, or on a pullback when we were looking like we were going to break support and we've been sideways forever and nobody wanted it and it took off running when nobody was looking. Sound familiar? Because that's usually the stuff that that we miss, right? So here's AT&T for an example. It's a big, gappy, ugly, nasty product. But it's within a price range. It's got reasonably decent options that I can deal with, so it's less than $30, decent options. But you can see what it's been doing for the last few years. The trend is pretty clear here. And hey, I don't care if it's trending down. I'd trade it to the downside just as much as I would trade anything else to the upside. But for my short trades, trying to time it for the next short, right? You don't want to get caught where you're getting run over. And when you're trying to trade momentum, it seems often enough, we're going to be looking at shorts here, trade momentum to the downside, that you've got to get in at nearly the worst possible time, and or you got to try to catch it when it's on the run. If we want to flip that around and look at it from the other direction, we could go with something like Nvidia. You had to be willing to buy this when it was still not breaking out, when it was pulled back to support and it really looked like it was going to break down, or you had to buy it on the fly. And we're on a weekly. When it gets on the daily, it looks a lot worse, right? Look at this and try to ask yourself, where in the heck would you even get into this? I kind of like those afternoons where it's a red day and we've fallen down, but we've rallied back up more than 50%, and we're going to close in the upper portion of that candle. Those are good ones to get in, but if you're early, you can get into them along the lows, or even through the 50% mark once we get the half back. And what we're looking for are those springboards where it opens up the next day even higher, or the next day, this one, the one that I was drawing an example on, it didn't really perform well the next day, but it has continued well. Now, NVIDIA is a little bit of an an overachiever. And I think they've hammered the heck out of Tesla talk today. Got Microsoft just continuing to grind to new highs. And you're left again with the same argument. You have to buy it after it's gapped up, or you have to buy it while it's still falling. And neither one of those feels good. It just sucks all the way around, right? So if you're looking for price patterns, we really don't get the opportunity for price patterns on a fixed list as much as you can get patterns if you scan for them, right? If we were to scan for, I don't know, 2-bar reversals, shooting stars, then we'd get a list of just those, but how many of those names are actually going to be on our trade list? So we're right back into that catch-22. Short-term traders, if you're going to do short-term swings, one of the things you really want to focus on is this afternoon follow-through. For me, it's a lot of red days. So having a fixed list like Microsoft, I know Microsoft as a company is a really good company. They're well run. The most dangerous thing here is earnings and dividend, investor day events, that sort of thing. Otherwise, I look for opportunities, on support. I look for TRBs, trendline breakovers, to where we can get, back up to the top of the range and maybe more. I like these red days where we come back up off of the lows, although, technically that didn't work out too good here. But those kind of patterns work out really well. You can add to it, of course, MACDs and RSIs and all that stuff. It's not really my thing. But if you have a fixed list, you could start to break that list down into things that are at their highs, things that are at their lows, anything that's recently had earnings or already, is getting ready for earnings, whether it's had a run up or not. Break your list down so that if you want some bottom fishing plays, you know where to look on your list. If you're looking for breakouts, everything like that, right? I can't tell you how many times somebody says, oh yeah, I was watching Netflix 3 days ago and I forgot it was right at its highs and I never looked at it again, and now look what I missed. It did all this. There's so much data, so much information coming at us 24 hours a day. It's easy to overlook our own lists, right? And it's easy to forget something that we were thinking about trading and then we miss it. And we're waiting on the next one and the next one and the next one. TD Ameritrade has a trade that they like that fits this conversation perfectly. And it's called Hold, which is kind of weird. C-A hold, H-O-L-D, Hold. Candle at the high of the lowest day. And Connie, one of the ladies over there at TD Ameritrade, who runs some of the YouTube videos, has made a price pattern scan on Thinkorswim for this, which is really cool. If you didn't know, Thinkorswim does do patterns. It's in the upper right portion of your chart. It says patterns. You click on that. You can show patterns and you can select patterns. So if you go in there, if you don't find the pattern that you're looking for, you can make your own, which is really cool, but kind of overwhelming too, because I mean, like how many pieces of the pattern do we need? How much, it's a lot more than what you would think. So Connie went in and she made these Hold patterns. I've got more than one because the criteria for it changes a little bit. There was trend up, and then there was trend in a pullback, and then we get the low day, that's the red one, and then we get the candle breaking out from that low day. So candle at the high of the lowest day, Hold, and there's our breakout candle. All right, so Connie made this, not me. I don't want anybody to think I'm taking credit for this. It's hers. And I can share it, by the way. This is the candle. You can just import it like you would do an indicator. So that was Cahold. If we back out of this, I've also got Cahold 2, which I think was just me looking at what Connie did and rebuilding it. Oh, I changed the candle numbers. That's what I did. So the same pattern, just more of an uptrend first, and then a little bit of a deeper pullback. Let's compare that with the other one. Yeah, she had 6 and 3, and I made it a little bit more. I think I went 7 and 4, just one more candle. Like I said, it's a nuanced difference, but I'll share this one too, of course. And you can really, dig down deeper into this. It's not like I've got it all figured out here. Make any changes that you want. And this one's 5.2, so this one's smaller than Connie made. I made one bigger than she made, and I made one smaller than she made. All right. So we can load all three of those, of course. And these are all bullish. If we wanted a bearish one, it's got a different acronym, CALOD, candle at low of the highest day. It doesn't have the same roll off your tongue, right, as the other one. But we can see here, candle at the high of the lowest day. This candle triggered. That would have been a Cahold trade. And we can scan for that on candles that are doing that from our list, right, which is really cool. Yeah, new eval accounts right now are about 50 bucks. If you wait until they run a 90% off, you can get them for about 20 bucks. The 25K accounts. See if we can find a Cahold. Nope, we don't have a pullback. Well, we got a Cahold started here, but it didn't follow through yet. In fact, this lines up with one of my doors, which is what I was going to go to next anyways. So I've laid out the Cahold, and we've talked about the door already, even the 3-day door, although it wouldn't matter if we used the 1 day or the 3. The high is what we're looking at. So Intel, which has earnings, so we kind of need to get past that, is at the door, day 1 open range. So if it was just a regular open range, or not all open ranges, we trade them the same. With this, we're looking to get above 49.5, and we want to challenge 52-week highs and get that expansion. I mean, yeah, we could. What do you guys think? You want to do a deep dive on Intel? It's got earnings tonight. I'm down for it. We've got, what, an hour? Oh, we got plenty of time. Plenty of time. Let's do it. So I got an earnings chart. We can do that first. Earnings analysis. Intel. We want to make it easy to read the labels, so we'll just scrunch everything together first. And I will post that into the chat. We need more time. This is only a 2-year. Oh, it'll work. It'll work. 2 years is enough. All right. It's analyzing 8 quarters. It's beat 6, missed twice. It has a pre-earnings ramp, a 21-day pre-earnings ramp of 19 cents, which is not encouraging. Some stocks really have a nice ramp going into earnings. This ain't one of them. It's got a post-earnings drop of only 3 pennies, so I mean that's not bad. And it's got a pre-8-day earnings ramp of minus $1.43. So this tells us that on average, Intel generally falls into earnings, and it didn't do that this time. It went sideways into earnings. It didn't fall into earnings. So that's interesting. Out of the 8 earnings that we've analyzed, 2 earnings had a big move greater than 5%, and 2 earnings had a move less than 5% but still positive. 3 of the earnings were negative more than minus 5%, which means one of those beats was still a negative market move. And 4 of these were negative in total. That's half the earnings. This thing's got a history of going down even after it beats. Well, that's not encouraging. So at least it's not a Netflix. It's not an account killer. It doesn't have a history of overstepping its expected move. But it does have a 50-50 chance that it's going to go down even if it beats. That sucks. All right, I mean, that's just what it is, right? That's what we got to deal with. So we got levels here. 46, or let's call it 45.5 to the downside, and 52.5 to the upside. That's what, $7? That's not bad. $3.50 up, $3.50 down. The market maker move is 317, so we can add that to this. Oh, they already did. The standard deviation is in orange. The market maker move is in gray. And that's the full measured move right there, up and down from 49. All right. Let's go check those options out. Now remember, its earnings is tomorrow. So we're going to talk about it today, but I'm not going to stream tomorrow, which is why we got to do it today, or we're just not going to get it. It's got an IV ramp that is higher than normal. That's why it's lit up in red. It's got an IV rank of 80 and an IV of 46. So things are a little unusual for Intel this trip. Things are a little different. I wonder why it's different this time. Let's get into these options a little bit. So one cool thing is we'll be using options that are closer to expiration, because tomorrow's options, you can get them before we go into the close. So you should get a reasonably decent price. They'll only have 1 day left. Let's turn on both sides. I've only got the put showing. We're looking at about $50 for a call. And yeah, $50 for a put. They're equal balanced, which is nice. Let's just evaluate one side at a time so we can see all the columns. So they got out of some of these 43.5. I would bet they got out of the rest of them today. They certainly got out of a lot of them yesterday. 25% of all the open interest was closed out yesterday on that 43.5 strike. We are on the put side. And it looks like they increased their position quite a bit on the 46.5 strike. We've got a $3.40 range with a $3.20 market maker move. That's $6.60 high to low from our current location, which would be $55 and $43 if we were to put those numbers together. I doubt you're going to want to do any sort of an iron condor. There's just too much risk that way. What you're better off doing is building a butterfly on each side if you wanted to play that kind of target. It would be the idea that Intel makes its market maker move, makes these levels, right, and then pauses there. The other side of it, though, if we don't look at just earnings, but we think about what happens after earnings, that's what I like to play, either the pre-market, pre-earnings run or the after earnings run. So back here, they had really good earnings. Things changed, and this was the outcome. Back here, things really hadn't changed all that much on that earnings, and we didn't really do much. Same thing here, right? It wasn't all that great. So what we want to know at this earnings is what happened back here, and are we expecting more of that this time? Because that would get us into a new breakout level above $50 and start working towards that $100 level. So if you want to play just the earnings, I would recommend a butterfly on these expected move levels. It'd be the cheapest way to go. Something like a 53 strike call side butterfly and a 46 strike or a 45.5 if they have it. Yeah, they got it. A butterfly there. They're not going to be expensive. Look at that, $4. That's an earnings play, right? A lottery that isn't going to rip your face off if you're wrong. And since they're so cheap, you could do both sides, right? But just be aware if you do both sides, you can lose both sides. There's no guarantee that if you do both, that one of them is going to win, because it doesn't work that way. They can both lose. But since they are so cheap, we can make them wider. PLTR, highly unusual sweep. And it looks like I missed in the video while we were talking, but that's all right. Oh, we didn't miss it. That was the one that I had posted earlier. So I just made it a little bit bigger. We still need to do the other side. So there we go. I made it another 50 cents wider. If we throw it into the Analyze tab, that would be our downside, and it's $10 risk. But it's got a wider base to it. It's if we go negative, price would have a better chance of landing in this than it would if we kept it 50 cents wide, right? So that would be one side of the trade. Then we could go in and we could do the same thing on the call side. It was 53, and we got to make this one $1 wide because they don't have 50-cent strikes this high up. But we're still looking at $6. And now we've got both butterflies. Now the cool thing about some brokers, especially Thinkorswim, is if price stays in the middle, you can rip this butterfly apart and you'd have a really wide iron condor. And I've done that on Thinkorswim. I've never done it with such short duration options, so I don't think you would want to, or I don't even think you could get away with getting it filled so short. Say you get this on tomorrow afternoon and Friday you want to adjust it, I don't think that you would get filled. But, I mean, maybe. But the cool thing is if you had put on a longer term version of this, you could rip the two butterflies apart and make one big iron condor out of it. That's cool. But the combined risk here is $15 for both of these trades. And if Intel lands in the upper area between 52 and 54, you make money. And if it lands in the bottom area between 44.50 and 46.50, you make money. So not too bad. At least it's a lottery where you're not risking, you know, 70, 80, $100. Because I don't know about you guys, but when I do get a scratch lotto, which is like never, I don't spend $100 for a scratch lottery ticket. You know what I mean? So a lottery, to me, is supposed to be cheap. That's about as good as you're going to get when it comes to an earnings trade. $5, $4. I mean, that's pretty darn cheap. What I'd rather do is focus on what if they beat? Where are we going to go if they beat? That, to me, would be a better focus. So with that in mind, if we were to go and look, first thing we want to do is get a big picture. You know what? I've got a chart set up for this. I don't need to go through it this way. Bring this over. Da, 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 da. So here's a quarterly chart that goes all the way back to 2015. And as you can see, Intel's doing really good. It's climbing its way back up out of this hole. Now we can do a deep dive from here. Get this half back level. You can see how we're above it. I need to move this. That's not the right spot. We're above the half back. We are inside this one big, really big candle. So that's one thing that we've got to fight for an upside move. It's about $1 wide as a zone. That'll get us there. So that's got the upper edge for us marked out. From the quarter, we can drop down to a monthly. There we go. Make sure we're not missing anything here. With this monthly one, it wouldn't hurt to get a 50% level. Just, oh, never mind. It's underneath. That we don't need that one. So that's no good. That ain't going to help us with anything. From here, we can go to the weekly then. We've got our door and that resistance. Probably the 50% of this one would be helpful. Not much, I guess. Not really much at all. Shoot, that quarterly did all the work. We've basically got clear skies. If we can break out above this 51 and a quarter, we're good. Might have a gap here. It's really close. We sure do. Look at that, we got a gap. That's about all we have for gaps. Now, if we want some upside levels, we can measure this pullback. I mean, it's cool we get a half back from that, but that's not really what I'm interested in. I want these levels up here, this 54.3 and 57.3. If it wasn't earnings, I like how these buyers have been stepping up. That's encouraging. But with earnings, there's no way I would buy this before because there's no guarantee that it's going to be a positive earnings. It should be a positive earnings. It really should, but you don't want to go with coulda, woulda, shouldas unless you're just going to open up a really small position, you know. All right, so I've laid out the levels. We get the earnings, and if they're positive, we got to get through this quarterly resistance. But after that, this thing could make some really decent moves to the upside. Let's see what some of these reports have to say. Well, we got our earnings estimate right there. 0.34. This is CFRA. Aha, that'd be why. There we go. And they got them at 45 cents for who's doing their earnings estimate here. We'll just say it's TradingView. It's not TradingView. They get it from somebody, but we'll just say it's from them. I don't know. They got them looking pretty good on the technicals. Seven analysts give it a strong buy. 27 give it a hold, and 5 have it as a sell. Here's the forecast in their earnings. I don't like this dip on this Q1 2024. It's had some really great blowouts, but look, this is concerning if you're going to try to get in before earnings right here. If they beat that good last time, they better come out looking like gold this time, or they're going to get punched. Plus, on the revenue, I like how it started to turn back up, but it cannot flatten out and come back down. It cannot. The market's not going to like that. All right. So we need to see that this is starting to turn around and come up. And if they beat again and we get another high bar, that stock should do good. We're talking, into the 60s. Remember, we're at 50. So we should have a nice follow through. But we got to know what's the widget. We got a discrepancy in the forecast, which is not too much of a surprise, really, on the forecast discrepancy. There's a place we can use. These guys are going to be coming in soon for a webinar too. Tip ranks. That's the same thing that we just saw at stock charts, or at TradingView. So they do have some buys, but if I undo that, shoot, now I can't undo that. Maybe I would just refresh it. Yeah, okay. Webush has them at a hold, and Rosenblatt Securities has it as a sell. Those are the top two, and they were both from yesterday. He raised his price target to 45 while still putting out a neutral rating. And this guy did a bunch of different semis, including Intel, Texas Instruments, probably did Micron too if I was to click on it and read it. It's got a high forecast of 68. So one thing that you could do if you think that it's going to be a positive earnings with a decent follow through is you could focus on that that higher side, $68. So you want to add time to something like that. They're calling 68 for the year. I don't think we want to go out that far, right? That cost is just going to be too much. Well, actually, it's not bad. It's $1.80. We could work that off. But I don't think we need to go out that far. We're talking about $15. Well, I guess, yeah, that is at the end of the year. That's its expected move is $15 for the end of the year. Let's try $10 in July. It's the same price, $1.65, $1.70. So how would we trade this if we wanted to buy it and defend it? So one thing that we could do is straight up buy the stock. Could buy at least 100 shares, and say we buy the 100 stock for an average price of $49. I would say we buy it a little bit at a time, but either way, we get 100 shares at $49 average share price. One thing that we could do is we could buy a put to protect this trade. That way, no matter what happens, we're good. But buying a put is cost, and we can't get that back unless things go down. I've got a spreadsheet for this. Let me dig that up. The question we want to have here is if we do go and buy a put, which put would we want? And what's it going to cost us? So let's get some of those answers. Let's go look at some puts. Let's start with July. Some July puts just to get some cost in here. If we bought the stock at 49, where would we want to unload this stock? Remember, if you buy a put, it gives you the right to make somebody buy your stock at that strike price. So say we buy the put and the market has earnings and it just drops to $30. If we bought a 50 strike put, we could force someone to buy our stock from us at $50 a share. I like that. Bought it at 49, made somebody buy it at 50. We made it $1 per share. We had 100 shares. We got profit from that. Would that profit be enough to cover the put cost? No. But let's let the formula do the math for us. So the mid price here is $4.50. We come back over here. The strike we're talking about is the 50 strike, and it's $4.50. The per share cost for us would actually be $53.50 because now our share cost is more expensive because we bought that put. So our risk is $350. We could buy Intel today, and without using a stop, we could just buy that put, and we would not have any more dollar risk than $3.50. That's pretty cool for an earnings trade if we're bullish on this stock in the bigger picture. But can we do better than this? We can get closer in time. So instead of July, let's come up to March. March has got some pretty decent options. And let's go with the 55 strike. even though that 55 strike's a bit pricey. $6.90. This makes our per dollar per share risk at 55.90 a share. But we're risking 90 cents total. We could buy the stock today, we could buy this put, and we're not risking more than 90 cents. $90. That's our real risk. That's not bad. If we have this trade on, what do we need out of the market to do better, to do some profit? Where's our profit come in? We need the stock to run higher than $55.90. Once it does that, we're in profit, and anything above that would be penny per share. We got 100 shares, so every penny would make us $1. Every penny above 55.90 would be profit. We just keep making money above that. To put this trade on, you would need an account with at least, say, $6,000 in it, because you got to be able to buy 100 shares to buy the put. You got $5,590 is what it would take, and you don't want to, be that close to the edge of your account, so you want a little room in there. But a $6,000 account could do this, and you're literally only risking 90 cents to trade an earnings play. And that's not bad. That is how you can use options to trade earnings where you're covered. So this is just the put side. What if we wanted to do something on the call side? I think I've got a spreadsheet for that too. Or I didn't keep it and I throwed it away. Hope not. Sure looks like I did. Gosh darn it. That's not helpful. Anyways, you can do the same thing on the call side, so we could evaluate the same thing. We'll just do it manually. So say we buy the stock, we got $49 per share, and we want to defend it using calls instead of puts. When we sell a call, it gives us a right to call away. Well, let's buy a call. All right, let's figure out what we want to do here. Oh, what do you want, Alexa? Yeah, she had an alert for me, some kind of weather alert. So we could sell a call, and that would allow us to unload our stock. Which call would we want to sell? And with this one, see, I don't like this approach on an earnings trade, because you can get run over, and then you're upside down in there. But let's say we sell the call at 55. If we sell a 55 call and we get run over, we can just unload our stock at 55, and that's fine, right? We bought it at 49, we unloaded at 55. That's fine. But we're not going to benefit from, a market that's running like a mad demon, and we've got the shares which should be making all kinds of money, but it's not, because we got to unload it at $55. So I don't like that. But if If we buy the put, we can unload our stock at that put price. If we sell a call, we can unload our stock at that call price. So if we sell the call on the $55 call, we'd only get $1 for it, plus our stock price, right? So we would make from 49 to 55, that's $6. And then the dollar that we got in credit, that's $7. 100 shares, I mean, that's $700 profit. That's not bad. But we don't have any defense for what if it, what if it falls? So, remember, at expiration, if you're in the money, it'll auto assign. As a seller, you can't force somebody, only as a buyer. So if we had the put, we could force that and put the stock on somebody. On the call side, we can't exercise it. It'll get exercised on us if we're in the money, but if we sell the call and the stock falls to $30, we can't decide to exercise that 55 strike call. We can't force someone to buy it at 55 when we're sitting at 30 because we sold to open. We could only do it if we were at 70 and we go into the money and the market makers run that exercise. So that sucks. I don't like the call side. If we fall, we have no recourse, right? Yay, we made $1, but we're still going to have all these shares at an average price of 48 because we made $1 back on that. But that wouldn't be very good defense. So I don't like that. I like the put side for this sort of situation. The only thing left that we could really negotiate on is if we bought a different put, would we be better off? Is there a better expiration than the one that we were evaluating? Hold on. So when we ran it, I did a March expiration. Since we are talking about earnings and everything, what if we pulled it forward just a little closer and we run some of these puts? We have a 49 strike, or well, $49 per share is the average cost we've been talking about. We could do something like $50 or $51 a share and see if we get a better outcome. See, I think using the call side makes more sense if your stock is already profitable and you want to do something with it, right? Like protect it or something like that. It doesn't really fit too well in a situation like this. So average share price $49, 100 shares. Let's try $52 at an average price of $4.15. That risks $115. Man, it's not bad. Here's 80 cents of risk. That's even better. We're looking at the 53 strike put at $4, and I should have been $4.90. I guess it's not as good because now we're back up to 90 cents. But you guys see how I'm doing that, right? You just take the stock price, you look at the put that you're going to buy, and for this sort of defense, the put is going to give you the ability to put that stock on somebody so that if we get a rally, your put's going to lose. You're going to be out that $4.90, but not necessarily. I got a trick for that. So your put's going to lose, and now you've got your stock, and you're looking for an exaggerated continuation play to the upside. If the market tanks, you get to exercise that put and unload the stock. No problem. I like this approach, especially if I'm planning to hold the stock for a while. When it comes to swing trading, this is the core of being able to sleep at night. What the heck? That was loud. So let me explain that statement a little bit. We'll look at my swing trade list. Yeah, Netflix is just giving it up. I called that top pretty good today. I'm proud of that call out, boy. 560, and we just barely went up a few dollars more in like a blow off top, and then down we went. I called it there, and it pulled back and tried one more time, and that was it. Now it's just taking it in the guts. Ha! Do the thing. All right, so these names have been on my list for a while, right? And I've got money in these. Some of them are not that exciting right now, like this one. But if we flip through this list, you'll see some of these that are just like that. Cardinal Health. I mean, come on, man. That's fantastic. But see these pullbacks leaving you digesting and digesting, and then just big blowout moves again, where if you weren't in it, you would have been chasing after it. But while you are in it, you've got to be willing to sit there and tolerate these digestion periods without dumping out of the trade. This is the part where traders get all screwed up. If you're going to trade a pattern, a setup, a move, momentum or trend, then you need a specific trigger or signal, and then you get in and you run it and you get right back out again. But when it's a buy and hold kind of trade, like this, you need to be able to tolerate these pullbacks and still keep the trade so that you make all the upside move and you don't dump it when it goes breaking out to new highs and all that. You just keep it and keep running it. And you have to keep track of your cost for those puts. Now, I don't tend to just carry puts on these. I get the puts when I think I need them. FOMC, earnings, dividend, corporate events. If there's some reason to buy the put, I buy the put. I try to keep the duration as small as possible. That way I can keep the put cost down. And I let that put expire worthless, and or I defend the put. So for an example back here, when it fell down to that 85 level, say I buy a put there and the put is for the end of the year, January. And then it does this and it really starts to expand away from that put. Okay, I don't need that put anymore. It broke through resistance. It's higher now. That resistance is my new protection. It's my new support level. Now I don't need that put. There's no reason for me to just necessarily close the put with a loss. I can sell a put against the put that I bought, and I can do that as much as I can until I've either paid off the put or the put expires. So if I had, say, a 90 strike put when we were at 85, and then we break out and we rally and we're at 96, 98, 100, I can sell puts. That would put me in like a put credit spread and just lock me in at that price until the whole thing expires. Or I can just keep being nimble and sell puts, buy it back, sell puts, buy it back in this move until I'm out, until I'm done with it. Right? So that's what I mean by that put that you buy doesn't have to just be this fixed cost loss. There's ways to deal with that. So kind of circle back, kind of wrap everything up. A fixed watch list, you got a set idea of what you're looking for. You want to approach it either as a long-term buy and hold trader or a short-term trader doing momentum and trend, a particular thing, right? Breakout, breakdown, evening star reversals, gaps, whatever. You got a signal to trade and you're trading it, or you got a longer-term bias. You're running a scan to find your names every day, or you've got a set list of names and you go back and you circle through that list of names constantly looking for changes or opportunities in it. Then when it goes to the trade itself, you're focusing on if you just want to do options or if you want to do stock and options. If you're going to be a buy and hold, I would really recommend doing a little combination of both, because you got to be able to sleep at night, right? And if you're doing a buy and hold, these things can take some brutal pullbacks. I mean, CCJ was a great trade, but you can see it's been rough. It hasn't all just been rainbows and sunshine in this thing, and it's still not done yet. But man, these pullbacks are no joke. And if you try to time it with a really tight stop and you're trying to be all specific, what you end up usually doing is just stopping yourself out of the trade and then it runs without you. That doesn't do anybody any good. For this kind of approach, what I really try to do is I focus on things that should continue to be strong. That's why all these are long trades for the trends. I'm looking for long-term growth in a particular sector, industry, group. I pick the strongest names in that list and then I run those. And that goes back to like every single investing and stock book out there, right? Always pick the strongest horses in your relative strength list, run those until they're no longer the strongest ones, and then swap out to whatever's the strongest and run those. And everything benchmarks against the S&P, and you just keep buying everything that's stronger than the S&P. But there's no timing mechanism to that. It's not things that are breaking out, things that have a trigger or a setup or an earnings, or you're just like, yep, I'm getting these. If you take that approach, spread your stock purchase out so that you can try to average into your stock trade, then be willing to defend it with some options so that if it runs, you're getting paid. And if it falls, you can either get out of the darn thing or you can make money on your defense. Now, with this sort of scenario, I've had people ask about it. I've never done it because I didn't really think anybody wanted to do it. We could do a portfolio on paper, buy into all the stock, and then buy into the puts, and just go through the portfolio. It's not a fantastic idea, right? Other than, like I've said before, on paper, I have a hard time keeping track of paper because it's just, I mean, I got real trades. Fighting a paper trade just doesn't really sound all that exciting. But by doing it on paper, we would be evaluating those trades often enough that if it had a setup for a momentum or a trend, then we would be right there looking at it anyways, and it'd be front and center. It'd be something that we can focus on. Obviously, the list is long, whether we're using, something like the trend list or using my OAC coaching list. Way too many names to think that we could just buy everything on the list. Plus, some of these are on here because they're sectors or indexes, and because I want to watch those sectors and indexes, not necessarily because I want to trade them. Semiconductors have been doing really good. Um, Communications, technology. So, if we were trading something like that and we were trying to do it with just calls, think about it. You'd have to buy this crazy expensive call or a call spread and just hold on for dear life while this thing keeps gapping up and falling down and gapping up and falling down. Tradable, yes, but if we're just going to run options and trade momentum, then I'd want to focus on things like end of day, 2 o'clock in the afternoon, catching things that are making a reversal off of support and trying to go long in them for like red to green plays like we had back here, or doji reversals like we had here, because those would make quick fast trades. If you're going to do that kind of approach, I mentioned this like way back at the beginning, how you can do it with options and it won't be as brutal. So we got some, I'm going to just use XLI here. Say we're looking at XLI and we think that this is going to have a recovery day tomorrow and that we're going to come up and check that 114 kind of year-to-date high. And so we want to get into it today, looking for that follow-through by the end of the week. And if we don't get it by the end of the week, we can think about shutting the trade down. So how would we do that and still limit our risk a little bit? One, we can use farther dated options. That should have been, there we go. So instead of using something right up into the front end, we can go out even just to the closest monthly expiration. That's February 16. And we can do a put credit spread at the money, or we could do like a call debit spread at the money. They're going to price the same and they're going to move just about the same, except that the call debit spread, if we go up, might take a little bit of a whack from, say like an IV drop. But we get 40 cents in credit, which means if we go to the call side, we could buy that call spread for, about 60 cents. Each trade is going to make about 40 cents max profit. So we're risking 60 to make 40 no matter which one of these two trades we take. They can't really be defended because they're short duration, but they won't lose a drastic amount of money right away. And this is why I say if you're going to trade an end of day trade like this, go far enough out in time to where if you're wrong, sure, you're going to lose a little bit of money. In this case, we're risking $60, but I would argue you're not going to really lose that full $60. You might lose, say, 25% of that $60. That's $15. So if that's your stop, then now you're risking $15 for a chance to make some of this $40. Let's say 50% of the $40. That's $20. So you're risking 15 to make 20. It's a little better than 1 to 1. It's not bad. Obviously, if you choose a cheap enough market, you don't even need to do the spread. So if it was like just calls for 15 or 20 cents, you could do that. And technically, I mean, this is $100. It's not crazy for cost. You could just forget selling puts and just straight up buy the call. If you do that, though, you're going to want to be at least at the money and or a little bit in the money. So let's go to the call side. But I like the spreads, though. This is how you can trade end of day stuff. And if you're wrong, you can get out of it tomorrow or even the next day, and you're not going to take a brutal beatdown for it. So take XLI. We are thinking, or we're talking about this reversing and going up. We would be looking for one of those days where it goes like red to green. Something like back here, where it hit the 10, closed at the bottom of the day. The next day it opened, gapped up, and it just kept right on going. That's what we're looking for. So if it doesn't do that tomorrow, if we open and we're gapped down even more, we can just close the trade and we're done with it. We'll take a small hit, but we're out. And we just move on to the next thing. Keep the losses small, look for bigger wins. If that's our goal, that'd be one approach right there to do that. The reason I think that people struggle with options and that they lose more frequently is they're going to try to do a trade like this and they'll use Friday's options. Well, that Friday trade is going to lose a lot of money really fast if you're wrong, and it's going to be almost no recovery to that option trade. You're either right or you're dead, and it's going to be blown up. So that doesn't work. Or they'll try to go naked, also short duration, and then it doesn't work and it blows up. So do a spread and put enough time in there to where if you're wrong, the trade gets whacked a little bit, you close it out for a minor loss, and you move on to the next thing. And we're not using far out of the money, like call debit spreads sitting at 115, although you could, but again, that's not defendable. So if it doesn't work, whatever you did pay, you're going to lose. If we did evaluate something like that, we go to the call side, we look at, I don't know, this 118, 119, something like that. It's about $10. But this trade, right, this trade's not going to, this is a low risk trade, or a low win rate trade. That's what I meant to say. It has a low chance of winning, which is why it's so cheap. There's really no way to defend this. If it doesn't work, it's just toast. It's done. There is a strategy for this, though. Trading things on support, trading things that are down, buying calls on a down day will get you more than trying to buy calls on an up day. And you're getting in, on the low like this, rather than trying to get in at a high like this. ADM, put highly unusual put sweep. Looks like they sold 4,300 of those things. Oh yeah, baby. I like it. So it didn't exactly do what I mentioned in the morning briefing. Earlier, I thought it would happen sooner. But this is what I discussed in the morning briefing. Looks like we're not going to get that MDP today after all. We bounced on the daily pivot channel. That might hold, it might not. That call wall held though. Check that out. 49.32 cog line. 49.30 call wall. That thing held like a champ. Yeah, you like it. All right, so we had this really big gap up on growth versus value. I kind of thought it was going to flip over, but it didn't. We're still sitting up there pretty high. This is bullish for the market, having growth versus value like this. It just says tech is dominant, and we know when tech is dominant, it's bullish the market. This is the NY Fang homemade version, so call it like the Mag 7 or whatever. Opened, gapped up. Let's go to a daily. Open, gapped up, ran pretty high, but still we pulled back. We're still holding above the 3, so still very dominant tech, bullish tech, even on a down day like this. The weighted 10, this is the $1.10 combo mix. When this is down, the market's bullish. When this is up, the market's bearish. We're rising, so the market is bearish. We're holding above key levels, so we're in risk zones. This is negative for the market. We're starting to lose some of that NASDAQ volume we was talking about. It's no divergence, though. And yeah, man, 2-year big pop in the 2-year dollar big reversal after the 9:30 open today. The ES was actually running up with the dollar for a little bit. Now that rising dollar is in control, ES is down, 2 years up. So yeah, big change on the day. So that kind of gives you guys something to think about as we go into the end of the day. The long Russell trade, remember we called IWM early this week. It worked reasonably well, but nowhere near highs of like ES and NASDAQ. Those things did much better on the indexes this week. Could have probably chose a better index to trade. I'm going to get off of here, guys. I'll see you Friday. Let me know if there's any confusion or, if you want more on those levels. We're going to do the levels every day, the founder's notes, and I'll post the updated spreadsheet of the bigger page, the upper part of that page, at least once a week. And I don't know. I think Friday we'll build a scanner so we can find those hold trades, and that way we don't have to hunt for them. We'll just get them in the scan list, and they'll show up. Then we just need to decide if we're going to use, our own watch list or going to scan the entire market for trades or how we want to do it. I'll see you all at the morning briefing tomorrow.
I'll try and stop by, man.
Yeah, I like it.